So, Martin, a bit of a mixed picture here. Some numbers came in line, some better than expected, some worse than expected. How are you reading these figures?
Well, you heard it. The numbers for the entire economy actually are quite a bit better than the sentiment of corporations. The main reason here is everybody was hoping for a big push for reconstruction, for going really into production again, for selling stuff again, and all this is not working out because the global outlook has deteriorated so much. So companies say, well, the situation is okay, but we won't really invest and we are really not charging forward right now.
Okay, it looks like CapEx might not be as strong as expected going forward as well, with the Tankan large all-industry CapEx survey looking at just 3.5% for the third quarter. So tell me this then, with these disappointing numbers, as you're calling it, for the Tankan survey, what does this mean for Japan's economy?
Well, this is really the frustrating number right now. Companies, after the earthquake and the three disasters, basically took such a huge hit on their sales and their profits that they became quite uneasy about what to do. If reconstruction and politics would be supportive already by now, they might be investing already. But that way they are still cutting back on their investment plans. They're all looking overseas and what to do. This might be helpful for profits in the long run, but it's not supporting the economy right now. So we can be happy that we are not seeing a further slump here, but the outlook for, well into next year is not as strong as hoped.
Okay, so given these Tankan results and other economic numbers that we got in the last few days and with slowing growth elsewhere in the world, does that mean Japan cannot escape recession, at least technical recession, with negative growth this quarter as well?
It very much looks like. Japan always needs overseas demand. It always needs exports to grow strongly. Usually this contributes about 50% to growth. And with the overseas environment cooling quite a bit, at least corporations are getting much more sensitive on the outlook. Overall, however, exports are still strong. Asia is still strong. So I'm rather optimistic that we are growing here while others might be falling into recession. I think we are creeping out of recession, but, well, of course, not being an engine for the rest of the world.
Okay, and talk to me about the future of Japan, considering we do have some benefits in that the yen is weakening on these weaker than expected numbers, right? So what does this mean for Japan going forward, and what are you closely monitoring? Well, the strong yen in a weak domestic situation is, of course, particularly problematic for corporations, and this is putting a big damper on sentiment in general. But overall, companies are coping rather well. Exports are still comparatively strong, and this is because the environment in Asia hasn't deteriorated so much. We are now seeing actually inflation coming down in Asia. This is helping tremendously. We might see more expansionary policy outside. Japan is becoming expansionary as well. So I wouldn't be too pessimistic on the outlook here and that the yen puts such a big dent on what's going on in Japan.